What is going on, traders? In this video, I will be talking about the ICT order blocks, how exactly I use them and interpret them, because there are quite a bit of interpretations if we look at all the content that ICT provides. We have some in the core content, in the 2016 models, in the 2022 models. Might actually get a little confusing, and I hope with this video that I can shed some light on exactly how I use them, how I use them successfully, and how you can actually too. I will also create a follow-up video that will be talking about the deviated SMC order block, which actually comes from the ICT order block, but is basically just a refined and changed version by people's personalities and trading plans. You need to look out when you use these types of order blocks, especially if there is no proof behind them, no study behind them. Make sure to always collect your data on the type of order block or just whatever you use in your model, because it can obviously affect your win rate. So whatever you use, always try to use something that has data to back it up. I personally use the ICT order block mostly because I have data to back it up. And in some cases, I will actually use a known version of an order block that I use in my old strategy, which I will also cover in another video. But this video is specifically about the ICT order block. So don't get confused with the deviated SMC order blocks that you see in other videos, other articles and explanations. So let's actually get started. What is an ICT order block? An ICT order block is the last set of up or down closed candles that took out liquidity. And it's very important that you include that last piece right there, because this is not supply and demand. We are working with ICT, which has nothing to do with supply and demand, and people get this wrong so often. An order block in our context is basically just something that took out liquidity. If you look at this chart, you can perhaps already spot it. I see a really nice order block right here. So as we can see, we built up some liquidity right here. We then took it out with these candles right here. Now, what do we see? If we just read the text again, last set of up or down closed candles that took out liquidity. So what is the order block right here? This is going to be your order block. And if you use the candle bodies or you include the wicks, it really doesn't matter that much. You just need to know if a candle closes above it, later on, it is no longer a valid order block. As simple as that. So what I like to do is I like to use the bodies themselves. I don't really use the wicks that often, but I will not be panicking if I see price make a move that looks something like this. At that point, I will not be panicking. I do see that perhaps the price goes a little bit past it, but as long as the body of those candles closes within the order block or below the order block, I'm good, right? I still believe that the order block has support. So in this case, this is quite a strong order block. And if we actually take a look, let's actually mark the beginning of the order block. So this would be your traditional bearish order block. If we take a look to the right here, we can actually see that price tapped into the order block and then started moving down. So this is a perfect example of an order block. Now we can also add some confluences to order blocks, because order blocks will not always be working. And some confluences for an order block to be more high probability and more successful would be that the order block, so in this example, the bearish order block, is in the direction of our daily set bias. If you want to learn how to actually establish your bias, I have a video on that. I will put it in the description so you can check it out, because it's actually really important and it will give you a serious edge. So if your daily bias is also set to being bearish, then you can definitely use this bearish order block as a really strong confluence. And then there is something else that will make the order block a lot more high probability, and that is if the order block, the move right after we formed the order block, actually breaks market structure. And what do we see right here? For this order block, for example, we actually break market structure here. So we have a market structure shift. And as soon as we see that, this order block becomes even stronger. And then we have one more confluence, which ICT talks about quite often in the 2022 model. And that would be if we have displacement right after the move that we move away from the order block. So here we have some displacement and some imbalance in form of a fair value gap. If we have that, the order block becomes even stronger. And as you can see, this order block actually worked out. So let me actually find you another example of an order block. So right here we have another really high probability order block. And I'm going to give you a few moments to actually look and find it yourself. Pause the video because it's a really good exercise. All right, I'll go over it. So here, what we can see is we have a bunch of equal highs. I'll mark them out, this one, and then these highs, right? So we see that we have these candles that actually take out that liquidity that is there. And right after that, we start moving down. Now let's actually mark out how I would draw the order block. For me, this would be the order block. And again, it's really simple. All we did is mark out the last set of up or down closed candles that took out liquidity, which we did right here. So this is going to be our ICT order block. Now, as for our confluences, do we have a market structure shift? Yes, we do. We have one right here. And do we also leave behind imbalance? Yes, we do. We do right here. And then if we look back later, price returns to that order block and actually moves down off of it, as you can see. So this was again a really, really high probability order block. And this also includes one of the elements that I would really like to talk about, and that is what I marked under other uses here in the 2022 model, when it comes to actually managing your stop. So let's say you are in a position right here that is based on the model from the 2022 mentorship. So let's say you took a trade right here, you manage your stop, something like this, and what you're targeting is the sell side liquidity, for example. If we take a look, this trade would actually fail, but there is a way that you could actually avoid this loss. A pretty simple one, or at least lower your risk. And that's also something very important, and I use this on a daily basis. What does the ICT mentorship also state? In the 2022 model, the probability goes down as soon as we violate an up-closed candle when we are in a bearish price delivery. So what we would expect is that price is going to cleanly deliver us towards our target. So if the algorithm had this as a target in mind, this sell side liquidity, then we should expect a near clean delivery. And of course, this is not going to always be the case, but usually when you take a really high probability setup that has been picked perfectly and is not going to be returning for more liquidity or orders, then you will see a really clean delivery. Now in this case, what happens and how can we actually manage our position? So what we can see is that we start moving down and then we start moving back up. Price is a little bump right here and then actually continues to go up to eventually stop us out of our positions. Now, how could we have managed our position? Let me move this order to the side for a minute. What do we see here? If we just read this sentence once more, the last set of up or down closed candles that took out liquidity is an order block. So what do we have right here? Is this a valid and high probability and strong order block? No, it's not. But this is a form of order block that you can actually use to manage your position. Because what do we have here? We have a set of 2 up close candles before a strong move down that actually breaks market structure. And these 2 up close candles, I would also call them an order block. So as soon as I see a candle body close above the order block, and you could argue in my data I use the candle bodies as the top of the order block, but you could also use the wicks. It all comes down to your data. You have to backtest this on your model. And as soon as I see price close above the order block, so let's say for example on this candle right here, I would be closing my full position. And at that point we went from, let's say we do 1% risk, we only lost let's say 0.20% of risk instead of the full 1% of risk. And this has everything to do with probabilities once more, right? Because as soon as we violate these up close candles, the probability of us winning the trade is also going to go down. This would probably not be considered a strong ICT order block, but I use the name order block for this as well, mainly to manage positions, and you will hear ICT talking about this in the 22 model as well. And that's why I implemented this in my plan. I think it's really strong, and that's why I am showing you guys this. And I will try to find some more examples. Perhaps I can actually go for a bullish example. So I'm going to look for that right now. All right, so here we have another really nice bullish example. What do we see here? We take out liquidity. Right after we take out liquidity, we have a strong move up. And now we're looking for the last set of down closed candles before we actually had the move. And they had to be taking out liquidity. So what would be our order block? This would become our order block. And now we're going to have to identify, is this a strong order block? So what do we check? Is it within the direction of our daily bias? Now here we don't have a daily bias, but let's assume it is. So then we check off that confluence and the order block becomes stronger. Does it break market structure? Yes, it does. Right here it does. And do we leave behind displacement and imbalance? Yes, we do. So at this point, we can mark this top out right here as our order block. And what do we see? Price comes back to it, reacts off of it, and actually shoots back up. And now if we take a close look, what actually happens here? We form another order block. We take out liquidity. So this right here, these last two candles, the last set of up or down closed candles after we took liquidity, becomes our order block. So now this is going to be our order block. And we should not see price violated. And if we go even further, what do we see? We take out liquidity once again. So we basically form another order block. We do break market structure with that order block's move. Then price comes back into it, taps into it, and then shoots right off again. So we form a new order block. And that's how you actually identify the ICT order blocks, how I use them to identify highs that will likely be protected, meaning the high probability order blocks, and also a way of managing your position when you are in a trade. Those are the only forms of order blocks that I use when it comes to ICT. And to me, it is really helpful. I just lose way less. I have way less drawdown managing my trades like this. So I think the ICT order blocks, they are really, really strong. And I highly encourage you to deepen your knowledge on them. Now, if it doesn't make 100% sense yet, I can understand. I recommend you to rewatch this video slowly and watch it as many times as you can or have to until it actually starts making sense. Now, if it still doesn't make sense, feel free to join the Discord server. You can actually hop into a voice channel where I can share my screen and go over your questions. If you like this video, I would appreciate a like. You could also subscribe to my channel for more content like this. And that was it for this video. Thank you so much for watching. Bye-bye.